Welcome to Armand Academy. Like and subscribe for more content and drop your doubts in the comments. Share with your friends and classmates. For private tuition in these subjects across all boards and universities, contact me here or the link in the description. Let's get started. Atharv and Anmol were partners in a firm sharing profits and losses in the ratio of 5:2. The balance sheet as at 31st March 2024 was as follows, and we've been given liabilities and assets. On 1st of April 2024, Surya was admitted as a new partner for 2/7 share in the profits of the firm on the following terms. Okay, and we have a new profit sharing ratio given to us and adjustments dealing with fixed assets. So I will put a dot over here for fixed assets. We have an adjustment for stock. Surya will bring in 3 lakhs as capital, 2 lakhs for goodwill premium. Capital of all partners will be adjusted on the basis of Surya's capital. Okay, on the basis of Surya's capital. Actual cash to be paid off or brought in by the old partners. It's an easy question, don't worry. All right, they've asked us for a revaluation account and partners capital account. Okay, so I'm going to go here. Okay, and we can start with our revaluation account. Okay, we can start with a revaluation account. Okay, and strictly speaking, I mean, you can write this in the books of the original partners. So in the books of Atharv and Anmol, in the books of Atharv and Anmol. All right. Now, going back to the question, they want us to do a revaluation account and a partners capital account. The partners capital account will contain the names of all the three partners. All right. So this is our partners capital. Okay, partners capital account or accounts. So we have got multiple partners. Atharv, Anmol, and we are admitting a new partner whose name is Surya. All right, so I'm going here and I'm going to write Atharv, Anmol, and Surya. More time. Atharv, Anmol, and Surya. Notice how I already had the format in place. Okay, you all have to make the format from scratch. Please use pencil and scale and be neat. Okay, and now we simply go line by line and solve. Okay, I'm starting with the liability side. We have got capitals, opening balance for Atharv and Anmol. Okay, immediately in the partner's capital account by balance brought down. Okay, and we have 8 lakhs and 4 lakhs. Okay, so I'm simply picking up and placing 8 lakhs, 8 lakhs, and 4 lakhs. Okay, 8 lakhs and 4 lakhs. Then going back here, okay, general reserve, they've not told us anything. So in the absence of any information, we break it up. We break it up in the old ratio. Okay, so I have the old ratio as 5:2. I take 3,50,000. Okay, 3,50,000, and we break it up in the ratio 5:2. Okay, and like this, 5 plus 2 gives us 7. Okay, and now 7 ones are 7 fives are, and I end up with 2,50,000 here. 7 ones are 7 fives are, and I end up with 1 lakh over here. Alternatively, the moment I got 2,50,000, I can subtract from 3,50,000, I get 1 lakh. Either way, just do the math. Okay, so general reserve 2,50,000 and 1 lakh by by general by general reserve 2,50,000. Let me try and fit it in properly this time. And 1 lakh. Okay, 2,50,000 and 1 lakh. Going back here, creditors, if there is an adjustment, we'll see. Otherwise, we have to go down. All right. The new profit sharing ratio between Atharv, Anmol, and Surya will be 4:1:2. Okay, and this is important because we need to calculate the sacrifice or gain ratio. All right. So remember the formula for sacrifice. Okay. So sacrifice. Okay. Sacrificed share, if you want, sacrifice share is equal to old share minus new share. And since we're admitting a partner, I'm assuming that both are sacrificing, but in case we get a negative answer in this formula, then the other partners gained. Okay, so I have to do this once for Atharv and once for Anmol. Okay, so in the case of Atharv, I have a sacrifice ratio. Okay, sacrifice ratio is equal to the old ratio, which is 5 by 7. In the case of Anmol, the sacrifice ratio is going to be old ratio, which is 2 by 7. All right, be careful, 2 by 7. And now we can subtract what they have over here. So what is this? 5, 7. Okay, so 4 by 7, 4 by 7. And what is this? Okay, 1 by 7, 1 by 7. Okay, and that's frankly a very easy calculation. Okay, I get myself 1 by 7 here, I get myself 1 by 7 here, which tells me that the sacrifice ratio between the two, sacrifice ratio is 1 by 7. 1 by 7 is to 1 by 7, which is as good as 1 is to 1. That means that premium for goodwill, when we reach it, is going to be split between them equally. Anyway, I'm still going to go line by line. All right, so I have done factoring in this fixed assets to be reduced by 10%. Fixed assets is what is 14 lakhs. So if it's going to be reduced by 10%, we multiply this into 10%, and that's as good as hiding a zero. So 1,40,000, which I am going to go to the revaluation account on the debit side to fixed assets. Why debit side? Your fixed assets are reducing. That is bad for you. Debit all expenses and losses. Okay, and we are going to put in 1,40,000 over here. Then going back to the question. All right, stock was sold at 4,20,000, but how much is the stock over here? 4,90,000. So the difference is a loss for us, bad for us. Again, we'll put it on the debit side of the reval account. Okay, so done. And I go here and write to stock, the difference. Okay, the difference between 4,90,000 and 4,20,000, and that difference is going to be 70,000. Okay, it's a loss. So debit all expenses and losses. Remember, it's the debit side. This is the credit side. All right. Always in the partner's capital account also, this is the debit side. This is the credit side. Now, back here. Okay, we are done dealing with stock. Surya shall bring 3 lakhs as capital. Okay, and 2 lakhs for his share of goodwill premium. Okay, so the 3 lakh entry is very straightforward. We go over here. They're not saying how it has been brought in, so we can assume cash. All right, so it will be by cash under Surya's column 3 lakhs. Then we have to deal with premium for goodwill, which is going to be split among the old partners in the sacrifice ratio. So premium for goodwill, okay, and please use full forms. Okay, we have premium for goodwill as 2 lakhs to be broken up in the sacrifice ratio 1 is to 1. So 1 lakh and 1 lakh, and going here, okay, to the old partners 1 lakh. Okay, and I keep doing that. One sec, let me try. 1 lakh and 1 lakh. Okay, now going back here, right? Anything else left? They have told us that the capital accounts of the old partners to be adjusted on the basis of Surya's capital in the business, actual cash to be paid off to or brought in by the old partners, as the case may be. So, what is that telling us? We know that the new ratio is 4 is to 1 is to 2. And if Surya is bringing in 3 lakhs, if Surya is bringing in 3 lakhs, okay, and the old two partners, Atharv and Anmol, okay, we have Atharv, we have Anmol, and Surya. So if Surya is 3 lakhs corresponding to 2, then Anmol is X, and we can cross multiply. Atharv is Y, and we can cross multiply. And I'm going to use a little bit of common sense. If 1:2, X is 3 lakhs. I'm guessing this X is going to be 1,50,000. Okay, similarly, if we have 4:2 and 2 is 3 lakhs, so then I'm guessing 4 will be 6 lakhs. Okay, please cross multiply if you want to, but this is enough. So I know that anyhow the closing balance of the partners is going to be 6 lakh, 1,50,000 and 3 lakhs. Okay, going here, and it will be 2 balance, 2 balance carried down. Okay, and the same numbers that I've just calculated. 6 lakh, 1,50,000 and 3 lakhs. Okay, so 6 lakh, 6 lakh, 1,50,000 and 3 lakhs. Okay, and what I've done by doing all of this is all the information throughout this full question I have now put into our two answer tables. One is the Reval account and one is the partner's capital account. Okay, keep in mind, normally balance carried down would have been the end of the question, but they're telling us that the old partners will be either bringing in or taking out cash in order to make sure that anyhow the closing balance becomes these numbers. Okay, so I mean, for Surya, it's already done. He brought in 3 lakhs, 3 lakhs carried forward, new partner admitted. But for the old partners, we still need to close the revaluation account. Okay, and we don't have any entry on the credit side of the revaluation account, so it's very clearly a loss. Okay, 1,40,000 plus 70 gives us 2,10,000, which I'm writing on both the sides. 2,10,000 written on both the sides. Okay, and then we write by loss on revaluation in brackets, okay, transferred, or even without brackets, by loss on revaluation transferred to capital account, okay, transferred to partners capital account, transferred to partners capital account, okay, and we need to mention the names of the two partners. Okay, so we are talking about the old partners, Atharv and Anmol, who had a profit sharing ratio, old ratio, right? Be very careful, old ratio of 5:2. Because I need to break this up. Okay, I need to break this loss of 2,10,000 in the ratio of 5:2. Okay, so let's assume uh, this entire section is a working note. Okay, 2,10,000 into 5 by 7, and similarly again into 2 by 7. Okay, and we need to do the math. Okay, and 7 ones are 7 threes are 7 threes are, so we are going to end up with, okay, we are going to end up with 1,50,000. Okay, 30,000 into 5 is 1,50,000. Similarly, 7 ones are 7 threes are, and 30,000 into 2 gives us 60,000. So 1,50,000, 1,50,000 and 60,000, and with that we are done with the revaluation account. Okay, and 1,50,000 and 60, I need to go to the partner's capital account. Remember, I'm making this entry on the credit side, of the Reval account, and that means the corresponding entry will be on the debit side of the partner's capital account. Okay, and it will be two revaluation account, two revaluation account. Okay, and it's going to be what I have just calculated, 1,50,000. Okay, 1,50,000 and 60,000. So going back here, 1,50,000 and 60,000. Okay, and now we need to balance. And for Surya, life is easy. I'm going to leave enough of space, healthy amount of space, and I'm just going to write 3 lakhs and 3 lakhs on both the sides for Surya's capital account. For the other two partners, I have to think a little bit which side is heavier. Okay, and notice over here, I have 4 lakhs, I have 1 lakh, I have 1 lakh. Okay, so altogether we are talking about like 6 lakhs. And over here, I just have 2,10,000. So I'm guessing the credit side is going to be heavier. Okay, so only for this fellow, whole, I'm going to write 6 lakhs on both the sides. Okay, why am I writing 6 lakhs on both the sides? Because if you add this, you're going to end up at 6 lakhs. Okay, and we write the heavier side on both the sides. And on the lighter side, we are going to be writing. And I'm going back to the wording of the question because they have told us actual cash to be paid off or brought in. So basically, cash account. Okay, so go by the question. Yes, we are in an era of demonetization and GPay. But if they say cash, it is cash. If they say check, it is bank. Simple. All right. So it will be two cash. And now I will take 6 lakhs and I will subtract the two numbers I have from 6 lakhs. So 6 lakhs minus 1 lakh 50, I think is 4 lakh 50 minus 60 will give me 3 lakh 90. Do it however we want. Your answer for Anmol is 3 lakh 90,000. Okay, now as far as Atharv is concerned, we have to do it again, but I think it is ridiculously high over here. Okay, we have 10 lakh 50 plus 1, 11 lakh 50 over here, it's hardly 2 lakh 10. So I can safely write the credit side being heavier on both the sides. Okay, so we have 11 lakh 50,000, 11 lakh 50,000, which I am writing on both the sides. And then I am subtracting the lighter side, which is 7 lakh 50,000. Okay, so 11 lakh 50 minus 7 lakh 50 is as good as 11 minus 7. Okay, which I think is 4 lakhs. Okay, so what's happened? They've brought in a new partner and they've taken out money of their own. And now with the new partner's capital, all three of them will work together in the business. Okay, I hope this was helpful. Any doubts, feel free to mention in the comments. Okay, I'm doing all of this. Sometimes, yes, it overlaps, it should not overlap. All right, make sure that you draw wide enough columns. Okay, and all the best. Your exams are close by.